Transferring ownership of your property to your children is frequently considered when people are looking to reduce future inheritance tax liability or avoiding care home fees, and this video looks at some of the issues. The most common way to transfer property to your children is by leaving it to them as a gift in your will. Inheritance tax applies at 40% and is charged on the total value of your estate, including property, over the tax-free threshold of £325,000. But if you own your home, the residence nil rate band means the tax-free threshold can increase up to £500,000 if you leave it to your children. If you are widowed, your tax-free threshold may double up to £1 million. You could consider gifting your property while you are still alive as part of your overall inheritance tax planning. However, there are a few points you will need to consider if you decide upon this course of action. If you die within 7 years of gifting a property, then your children may still have to pay inheritance tax. But if you die between 3 and 7 years, the amount of inheritance tax your children will have to pay may become lower through a system called taper relief. If you gift your property to your children, then they won't have to pay stamp duty if there is no mortgage to pay off. However, stamp duty will need to be paid on the value of the outstanding loan if there is a mortgage on the house. Once you have gifted your property to a child, it is important to remember that you will not be able to live there rent-free, because if you do, inheritance tax will become due. Rent must be paid at a fair market rate, which will be regarded as income for your child, and so it will be subject to income tax. Capital gains tax may also be payable in the future if the property is not a child's principal primary residence. This means that if you transfer the property to your child and they do not live in it, they could be subject to capital gains tax on selling it if the value of the property has increased since the transfer. Gifting or transferring property to a child also means that you are no longer the homeowner and you don't have any rights to occupy the property. If your children's circumstances change, you could be placing yourself in a vulnerable position. Transferring ownership of your property is also considered a way of avoiding care home fees in later life, because you will be required to pay your own fees in full if you have over £23,250 of assets. However, there are a number of complex rules to be aware of, and local authorities may take the value of your property into account even if you have transferred ownership, because it could be viewed as deliberate deprivation of assets. This means the property could still be included in the test for funding. Beckett Financial Services is an award-winning firm of financial consultants. We have been helping clients make the right decision about their later life care and investments for over 30 years. To talk with a consultant, phone 01284 754 500 or email info@beckettinvest.com. Our website is www.beckettinvest.com, and you'll find our social media links there if you would prefer to connect with us in that way.